JSPL has been a stock in focus ever after Bloomberg reported that the company is keen to acquire Reliance Naval. What's the strategy behind the move? How does the outlook look like for the industry? What are the synergies that this would get for the company? Let's find this out from the managing director of the company, Mr. VR Sharma. Hello and welcome to BloombergQuint. Hi, this is Nickey. I'm going to start off by asking you about the motive behind this move, clearly because it's one of the asset which is clearly different from your core business. So what's the strategy behind this?
Hello. So this is not different from our business. I would like to explain to you, we are looking at Reliance Naval just for one purpose, and that is forward integration. As you know, we are the largest plate manufacturers in the country, and we also produce very, very specialty plates for warships, for the merchant shipbuilding, and also for the general fabrication. So our aim is, what are we looking into it, that the facilities are very good. We had visited the site, we have visited the facilities, the workshops are excellent, and we want to utilize this facility, manufacturing facility, for the heavy structures as well as for the shipbuilding. We are not looking this facility as a port, which maybe some other people might be considering, but our main aim is to do the forward integration. We will transport our plates to this particular site. We will start manufacturing vessels, ships, containers, and many more activities can be done. And if Government of India, they are interested and they allow us, then we will definitely be interested in building the warships. So that is our interest. So it is a forward integration to our steel mill. This is what we are looking at.
Sure, I get your point when you say it's a forward integration of sorts, but the only question that I have, and I'm sure most of your shareholders will have in your mind, why buy an industry which is so capital intensive in nature, which has been technically giving lower returns? Even the capital giant, capital goods giant infra, L&T has gone on record and said that it's not typically an industry which is, which percolates down well into terms of returns. So what's your rationale behind this? How are you different as compared to the rest of the lot?
You see, I tell you, any business you have to see with 2-3 different angles. One is the location. The location is excellent. It is on the Arabian Sea and west coast of India. The number 2, the geography. The geography is also very good. This is within Gujarat, and Gujarat is a very promising state. And it's very, I would say, industry-friendly state. And number 3, the situation is changed in last 1 year time. Government of India, especially Honorable Prime Minister, is every day telling that we have to make India Atmanirbhar in terms of weaponry, in terms of warships, in terms of building aircrafts, and in terms of developing each and every equipment which is required for the Indian Army and Indian Navy. So, this gives a very big potential and a business sense to gel with the Indian government's theory and to gel with the Indian government's plan that they want to build the warships within the country, merchant ships and oil tankers, as well as some of the Coast Guard ships and the vessels required by ONGC. So this makes a very big business sense. Maybe till yesterday, this business was not good, but we feel that the business is good. Anybody who acquires this and who would like to use this facility in the interest of nation, and then I think it can be a very good deal, and this can be, the perception can be changed.
Okay, so let's just put numbers to that, right? What sort of growth did this industry register, say, in the last 5 years? And what sort of growth do you think the industry has the potential to register in the next 5 years, which lets you bid for such kind of a business?
You see, there are 3 businesses in it. Number 1, the business for the smaller vessels with 50 to 60 meters long. The another business is 100 meters plus. And the third business is 190 or 200 meters long vessels. So these are the 3 major products what can be done in this particular company. The next business is the repair and maintenance of business. As you know, there are so many companies and so many international navies. They have approached this company for the refurbishment of their fleets. This is what we were told by the team there. And that is also another business, because this is on the west coast of India. And the facilities are capable to produce and also to repair the world vessels. So, Gujarat is already a scrap business. They are in the vessel cutting or the ship breaking business just about 100 kilometers away. And this business is going to be a vessel manufacturing or ship manufacturing business. So two extremes are available on that coast. Why is it so? Because of the ports available, because of the facilities available, and because of the skill available. So all these three things are enablers to make this company totally turn around. This is what I feel. And over and above, as I told you, the support from Government of India will definitely make this company run in a right perspective and right spirit. Then the another business is when you are sitting on the western coast of India, on the Arabian Sea, then there are not many opportunities to service to the countries, those who are friendly countries, of course, to service to them, especially to the Middle East for the all maritime and also for the merchant navy, merchant vessels, and also to the European countries as well as to Latin American countries. Already we have already the world is having facilities in Korea and China for shipbuilding. They are doing very well. Korean shipbuilding industry is doing extremely well. So they are in a position to service to the Southeast Asian requirements, including Japan. And this particular company can definitely meet out the requirements of the Western world. West-bound customers, and they can definitely bank upon this. Though it is a little lengthy exercise, very difficult, it will be too premature to speak because we have just issued the expression of interest. And we have not acquired or possessed this particular asset. So we have to see whether it goes through, it materializes or it doesn't materialize, depends upon time. But we have shown our expression of interest that yes, we are willing. Two reasons, as I explained to you earlier. One, we are looking this facility as a downstream facilities to utilize our plates, structures, angle, channels, beams, and the facilities of workshop. The entire factory, the sheds are so beautiful, so good that we can manufacture the heavy structures which are required by different kind of projects in Gujarat, in Maharashtra, in Rajasthan, in a central part of the country like Chhattisgarh and MP. And finally, we can export also. So there are two different business lines. One, shipbuilding. The other is structures building. This is what we are aiming to.
So when you say shipbuilding, what's the kind of growth that the industry has registered in the last year or so? And what sort of potential do you think it will have going forward? What's the kind of size? How do you expect it to grow? Can you throw some numbers for us to evaluate this proposal?
Post-COVID, the shipping industry has gone through a different kind of business line. If you see today, neither the containers available nor the vessels available. So I think next 1 decade will be for the shipbuilding industry. And this is going to happen. This is the writing on the wall because the world movement has started in a big way. And
tell us some numbers if you can give some sort of industry size, growth rates.
My projection is that this industry can grow at the rate of 10 to 15% year-on-year basis.
And now it's currently at what levels?
Currently in India, it is a meager level. I would say plus minus zero. But India has a potential to make this industry up by 10 to 15%.
Okay, with this acquisition, so what's the kind of returns are you looking at in terms of EBITDA? And what would be the order size which you would require to generate that sort of EBITDA?
You see, first of all, we have to see whether this comes to us or not. Secondly, these what you are asking, these questions, these are something under the backdoor calculations what we have been doing now, but it will take some time to come with the right figures. So it will be too early to speak to these numbers. But as I told you, we are aiming 10 to 15% of growth on YOY basis if we have this kind of facility in India, and especially on the West Coast and in a state where the skill is available, that is Gujarat. So this is going to be a plus point. Number two, the overall EBITDA, if you see the ballpark figure, yes, we are looking something about 3,000 crores of EBITDA a year from this unit. because it is not only a shipbuilding, it is also fabrication of the heavy structures and the specialty structures. The entire country is moving towards specialty steel structures, whether it is bridges, dams, or it is high-rise buildings, or power plants, or nuclear power plants, or any other facility. So, because now we have on the east coast of India all these manufacturing facilities, we do not have any facility on the west coast of India. The moment we have such a fabrication facility in the west coast of India, we can consume our plates, steel, structures, angle, channels, and many more items. So this is what the business plan is. So we have two, as I told you, we had two business plans out of one plan. That is, one, to produce the structures, specialty steel structures, and number two, to produce the ships or the vessels.
Yeah, talk about the debt situation, because Reliance Naval, the last time I checked, as of FY20, the numbers were close to 9,492 crore, somewhere around 9,500 crore. Let's just put that number to that extent. How much is the number right now? And how much is the kind of haircut that the lenders are, willing to take at this point of time, given the set has already, the deadline of it has already been extended 4 times?
You see, the numbers what you are reporting are correct. So this is what we have also learned. As far as what is the haircut the lenders can take or may take, this is yet to be decided by them. We have shown our interest. We are interested at a price. Yes, we are interested. If you see the history in last 24 months, you will see that steel fabrication units, and the related industry, they are sold at a price of from 18% to 70%. So, it depends. It is a very large variable available in the market. So I cannot comment today that what will be the price, because this is going to influence the investors, as well as this is going to influence the seller or the NCLT team or the lenders. So that statement will be very premature if I speak something. So we are
given how the deals have panned out in the last 2 or 3 transactions in the NCLT, it's a 20%, 30%. If you can put some numbers, the ballpark estimates. Basically, what is the sort of haircut do you think the industry as a whole can be expecting, given how the previous deals have stacked up?
No, it is very difficult. I cannot tell, because this has a direct influence on our strategy and policies. I cannot reveal.
I remember you telling me that Monet Ispat probably was at 18% of the overall debt. You told me Bhushan Power was at 40% of their overall debt. So what sort of number are you expecting?
These are the published figures today in the country, that how the assets are sold or divested. So, each asset has its own merits and demerits. So a port-based facility, whether this is good for the steel industry or not, this is what people have to see. And more so, it is not only the investors' money. The lenders and Government of India, the bankers, they will have to see that there should be some company who takes over, who can add value to the facilities.
Mr. Sharma, I just want to touch base a little bit on the financials, and allow me to do that. 25,621 crore was the debt that you had, net debt, as of the quarter ended December 2020. Let us just put it that way, that how much debt would you how would you fund this acquisition, if at all, if it comes to your kitty? Would it be a mix of how much equity infusion, how much of it would be debt, how much are you in a comfortable situation to let off your debt, go a little higher, because it's after, I think it's after a while that the debt situation has started coming back into the grip, right? 30th September, the debt was 28,000. Quarter ended December, it came down to 25,000, crore. So how would the leveraging situation work for you?
You see, first of all, as I told you, we are not interested in borrowing money for any acquisitions or any investment we make, even in steel. So capex is zero. So first of all, so we will not add any capex, any borrowing, fresh borrowing, and we will not increase our debt. Now, this year we will be touching more than 12,000 crores of EBITDA, the financial year, that I can share with you now, because these are the projections, maybe more than 12,000 crores. So this is in year 2021, and the next year 21-22 we are aiming for a bit of 15,000 crores. You know, the whatever investments we'll make out of our own accruals. We are not willing to borrow any more money. We'll keep on reducing our debt. It is at 25,000 crores, and by 22-23 we have to reach to 15,000 crores. So all those long-term business plans are in place, and whatever we will invest into, we will invest out of our accruals only. Now today, if we start a steel mill expansion, a blast furnace or electric arc furnace or any other thing, so this will take about 2 to 3 years time to come into operation. But an asset like this, which can give a value addition of at least 50% of on the plates or on the steel structure, and then it is a good deal. And so that will earn 3,000 crores odd of EBITDA for us, additional EBITDA. So if we reach to a level about 13,000 crore EBITDA from steel manufacturing, and we generate another 3,000 crores of EBITDA by utilizing the steel in manufacturing vessels, shapes, warships, or fabricated structure, then there's no harm. It makes a business sense. So
how much time do you think this entire procedure, decision making would take?
You see, if I were the decision maker, I'll do it in 3 to 4 months' time. But it depends upon the lenders that how much time they will take. You know, sometimes there are thoughts and then afterthoughts. Sometimes people feel this is the right price to sell at, and then maybe afterthought, no, this is not the right price. We must try something else. So they are free to invite as many as interested people. I do not know how many more people are interested into it. But if there are many number of people, those who are interested into it, they'll get a much more better price. Otherwise, no, we have in our mind, we will not go beyond that what is affordable to us. So we know our limitations, we know our capabilities. We do not want to borrow any money henceforth. That is our plan, and we will not deviate from that. We want to keep on reducing the debts, as I told you earlier also, and now I'm also telling, we'll keep on reducing the debts. So we will bring the debt 15,000 crores below. We will bring the EBITDA to 15,000 crores and above, and we will make our sales turnover to 50,000 crores. So our target by 23 is 15, 15, 50. If this happens, then we'll be top 7 private sector companies in the country by 22-23. This is what we are aiming at.
Mr. Sharma, let's get back to the business that we're best doing at, which is steel, of course. How's the situation right now, how different it is. You've spoken about HRC prices. There have been reports suggesting that JSW Steel has already taken a price cut to an extent of 1,000 rupees per ton, both for HRC as well as CRC, due to the subdued domestic situations right now. But how do you view the assessment, and have you also taken price cuts?
You see, we have not reduced prices. Our prices are very fairly well placed in the market. We are selling our quantities, whatever we produce, and we are running at 95 to 100% capacity utilization. There are no issues. So we are working with an index. Yes, what is the iron ore prices? What are the prices for the alloys? What are the prices for the fuel? Because, in last few days, you have seen that the fuel prices have gone up like anything. That has increased the freight prices and the freight cost in the country on pan-India basis. And for exports also, there is a 25 to 27% increase in the freights. So whether inbound or outbound, the containers are not available. The vessels are in short supply. The whole world is moving. The whole world is consuming today. I do not know. This is what we were expecting during lockdown time. You asked me a question, what is going to happen after lockdown? And I used to reply you that, look, after lockdown, the demand will outperform or outstrip the production. And this is what has happened today. This is what we are seeing. Each and every field, whether it is steel, plastics, general commodities, tiles, building material, everything is in short supply. The cars are having a waiting time for 6 to 8 weeks. This was unheard. People were thinking during lockdown that the industry, what will happen to the car industry? And I was the only person, perhaps, I was always telling, let the people come out from their homes. they will be buying day in, day night, and there'll be shortage of everything in the world. And this is happening today because the whole world, at least 4 to 5 billion people, they were sitting in the homes for 3-4 months' time. Everybody was scared. The moment they got out, the vaccine is available. Now people are again confident because it's a human nature. Consumption is a human nature. So whatever steel prices, consumptions we are seeing, these are true consumptions. These are not ad hoc consumptions. And this condition, I feel in my view, will sustain and remain for next 2 years. After 2 years only, the world will become normalized. Whether it is shipping industry, or it is container industry, or it is consumable industry, or it is steel industry, metals, plastics, bullions, whatever. The whole world will get normalized at least after 2 years' time, not before that. We have kept the corona or the COVID has kept these 5 billion people inside their houses. Now they've got time to come out and they will buy. And we must be prepared for that.
Mr. Sharma, on the parting note, the last question that I have for you in that case is about the Tangshan going under, China taking these, going actively and cutting down the production so that the air pollution and the concerns that they have around the air quality, they come under a curve. With that, we're expecting the HRC prices globally also to come down, or rather to go up, sharply. But with the situation right now at home, do you see the domestic players exporting more in Chinese market, and hence by virtue of that fetching a little lower realization? Or you think the situation would be different? Where is the focus right now, in the globe or back, in the domestic market?
I will tell you. If you see the total global market today, hot-rolled coils are not going to China. Hot-rolled coils are being exported by the Indian hot-rolled producers to Western countries. It is Europe, it is Latin America, and also the Middle East. That is the hot market. In Southeast Asia, the only one market which is existing for the Indian players, that is Vietnam. So these are the overall scenario of the hot-rolled coils. Now coming to the semis. Yes, semis are going to China because China, if you see today, the semis cost of production in China is today $660 a ton. They are buying from India or from anywhere in the world at a price landed to their country, C&F price, $625 to $630 a ton. So they save at least $25 to $30 when they import billets or the semis from India, from Iran, from Ukraine, or from Russia. So now the question here is, why are they buying? They are buying because steel manufacturing cost is very high. Reason, iron ore prices are $178 to $180 a ton. The coking coal prices in China are much higher than the rest of the world. The ferroalloy prices have gone up. The demand has gone up from 18 million ton per month to 100 million ton per month. You imagine we produce only 100 or 110 million ton a year. So they are consuming 100 million ton a month. So this is what driving the whole world. And so is America. We are expecting that America will register a growth of GDP growth of more than 7% this financial year, this calendar year. So if it happens 7% growth in America, then you can imagine what they are going to consume and how they are going to consume. So it is a demand which has erupted in the world, and that has created a sort of uncertainty everywhere. So we have to bear with this, and we have to find out the alternate products, of course, if we can, or we have to bear and we have to find out the high strength steel to be used so that in total tonnage it will be less and the covered area will be more. This is what I tell to all of my customers. Please don't be behind the tonnage. You buy the high strength steel, lower thicknesses, so that your total surface area is covered better and you can get a right product, right price, and your project cost will not go up. This is what I'm suggesting to all of my customers. But I feel there is a stable outlook in times to come, barring some 2-3% plus minus. The prices will not go beyond 3% or 4%, and they will also not come down, in my view, more than 3 to 4%, depending upon the different markets. This is my view, and I feel this is correct.
All right. Mr. Sharma. We'll leave it at that. So with this, the managing director seems to be pretty confident when it comes to the steel industry. Says as it's bullish for the steel industry for the next 2-3 years. Expects the shipyard industry to grow at a pace of 15 to 20% per annum. Turnaround time for Reliance Naval seems to be 3 to 4 months, given the kind of business conditions laid out at this point of time. And EBITDA focus to will be to an extent of 3,000 crore from this business opportunity. With this, it's a wrap. Thank you so much for joining.